This is Richard Flax at Moneyfarm, and for the last video of 2020 we wanted to look back, make a couple of comments about what has been a remarkable year, and then set the stage a little bit for how we think 2021 will go. When we look back, it's been a year of tremendous tension, tremendous pressure, of great loss, but from a financial markets perspective, perhaps the most interesting thing has been the gap between financial markets performance, financial markets expectations, and the real economy. We see an economy in recession, we see a healthcare crisis, and yet financial markets, particularly global equities, have been surprisingly buoyant. And there's some logic behind this. Firstly, from a healthcare perspective, before 2020, the process of creating a vaccine was something that was measured in years. For this year, depending on how you measure it, the whole process has taken something around 300 days. And hopefully all will be well with the vaccine and with its distribution, but nonetheless, that's an impressive healthcare achievement. And it's something that, in fairness, equity markets, it seems, began to anticipate somewhat earlier in the year. And began to reflect. The other part is that actually corporations, listed corporations, proved to be fairly resilient. Profitability in a lot of instances actually held up relatively well. Now, it held up relatively well because there was dramatic and very meaningful policy support in terms of lower interest rates, quantitative easing, and significant fiscal support. But nonetheless, overall, we've seen, at least so far, corporate margins holding up rather better than they have done in previous recessions. And that brings us to 2021. And there's a few points to make here. Firstly, healthcare will still be very much front and center. If you ask investors the thing that they fear the most for 2021, it really comes down to some concerns about whether vaccines will be effective, whether the virus will potentially mutate, whether distribution will be more difficult. Well, there'll be some challenges around that. And it's important because it speaks to the concerns around normalization. How quickly will the global economy normalize? And healthcare is obviously a critical part of that. The second part speaks to the economic recovery. Prior to the pandemic, not all economies were performing extremely well. You still had concerns about growth, about unemployment, particularly in Western Europe, and those concerns have obviously been exacerbated. Now, we've seen tremendous policy support, but we still see relatively high levels of unemployment. And the question is really, how quickly will the global economy recover, and to what level? Will we be able to see growth accelerate beyond where we were before? Or will we actually see a sort of very slow, measured recovery the way we did after the last crisis? And that has implications for governments in particular, as they think about the best way of exiting some of the very significant support that they've been providing over the past year and are likely to provide going into 2021 again. And finally, there's a financial market perspective. Financial markets, particularly on the equity side, are relatively optimistic. Valuations are above their long-term averages, and a range of sentiment indicators suggest that investors are quite bullish about the prospects for next year, and with good reason. If we see a successful vaccine and a successful reopening of the global economy, then we're likely to see a meaningful rebound, not just in economic activity, but also in corporate profitability. And that's something that should underpin a decent year going into 2021. The concern, of course, is how much of that is already priced in. We think some of it is. But nonetheless, if we continue to see strong operating momentum from a broad range of businesses, that's something that we don't think is fully reflected in financial markets. And finally, there's a point about some key themes that we have. To what extent will the world change? We would expect to see certain trends continue to accelerate as they have done in 2020. The most obvious candidate is digitalization. It's a trend that's been going on for a number of years that was really accelerated by the events of this year, and we think that that will continue. Similarly, the question of sustainability is now very much in the forefront, not just of investors' minds, but also in the minds of governments and increasingly of populations. And we think that's a trend that will also continue. A few where we're a little bit less sure. To take an example closer to home, this question of working from home. It comes to us under a broader theme of almost localization. Will people go back to their offices? To some extent. We would expect to see a bit more of a flexible working environment than we have up until this point. But we also think, on a broader note, that governments will begin to consider supply chains in particular a little bit more carefully than perhaps they have done. The pandemic at various points has thrown up the question of global supply chains, of security of supply of a range of important products. We think that perhaps regulators and governments will be thinking a little bit more, and corporates as well, but will be thinking a little bit more carefully about the security of supply of certain key items and what that means for where you locate manufacturing, how you incentivize companies, and so on. Nonetheless, at the end of a very difficult, very challenging year, we see signs of optimism, particularly on the healthcare side, and hopefully those will come to fruition in 2021. And from that perspective, we're quite optimistic that we'll see a good economic recovery next year, and that governments will be cautious about withdrawing some of the support that they've provided to ensure that they don't choke off the economic growth that we're expecting to see. So thank you very much all for listening. Please take care of yourselves, and we look forward to speaking to you again next year.